You need likely, 2, 3 years of high metal prices. I'm talking about $50+ silver, sustainable, whereby the banks will get comfortable, the mining sector will get comfortable, and they go, okay, so $50 is the new low, right? Because right now the low of silver is basically $20. We've seen 20 hit how many times in the last decade, right? So the market's comfortable with calling $20 the low in silver, right?
Right.
So how long would it take for the banking sector to get comfortable calling $50 the low? It's not going to happen overnight.
InvestingHeaven.com updated its silver forecast and price prediction. The price of silver will move to our first bullish target in 2024, which is $34.00. They predict silver to hit $48 either by mid-2024 or mid-2025. Silver is forecasted to be higher in 2024 because the topping pattern in yields is confirmed. The US dollar has already confirmed its inability to move much higher. KeithNeumeyer of First Majestic Silver warns of mining board's caution about a $50 silver price. He predicts a lengthy adjustment period for banks to accept it as the new baseline while acknowledging industry challenges. Keith mentions his investment independence from interest rates while confident in profiting from gold and silver as the ultimate currency. Regarding his viewpoint, Keith underscores the role silver plays in the evolving world. Market consensus points toward a further easing of inflation to 3.3% year-on-year in November, down from 3.5% in the prior month. This outcome will boost optimism that the Federal Reserve could start cutting interest rates as early as the first quarter of 2024. Silver industrial demand is expected to grow 8% to a record 632 million ounces this year. Key drivers behind this performance include investment in photovoltaics, power grid, and 5G networks, growth in consumer electronics, and rising vehicle output. He also points out silver production capped at 825 million ounces annually while questioning the sustainability of deficits. For silver supply in 2023, Metals Focus's most recent data, released on November 15, projected that mines will produce 820 million ounces by the end of the year, a slight decrease over the 822 million ounces mined in 2022. Combined with recycled sources, total supply is predicted to come in at about 1 billion ounces. As it did in 2022, demand is expected to outstrip supply in 2023, driven in this case primarily by a projected record high of 632 million ounces in demand from industrial sources. The shortfall will be lower than 2022's record deficit of 237.7 million ounces, but silver supply is still expected to fall short by 141 million ounces in 2023. Meanwhile, Keith suggests Russia's reserves and China's export policy may impact silver prices if imbalances persist. Now, we present the clips of KeithNeumeyer's insights from his recent interview with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I own gold and silver and mining stocks for completely different reasons and I don't care what interest rates do. Your interest rates go to zero tomorrow or 20% tomorrow. I'm going to make money either way. So it doesn't matter because I know that gold is the ultimate currency and silver is in such a crazy supply deficit. If we're going to do what we need to do as a human race to electrify our planet, do all the things that we want to do, create electric cars, solar panels, cell phones, computers, refrigerators, all the things that we want, as a human race to improve our lives, we need silver. And so there's huge reasons why you want to own gold, and there's huge reasons why you own silver. Whatever the Fed does, the US government does, I don't give a shit. If you have $50 silver price tomorrow, people get excited, but the boards of directors of these mining companies won't increase their investments. They know it's happened twice before, and they got screwed. For them to go to their banks that they deal with and say, "Hey, look, we want to build this silver mine, and silver's at $50 today," they're going to look at you and say, "Really? Like, come on, like, look at history." So they're not going to give the mining sector the funds to develop those mines. So, you need likely, 2-3 years of high metal prices. I'm talking about $50+ silver, sustainable, whereby the banks will get comfortable, the mining sector will get comfortable, and they go, okay, so $50 is the new low, right? Because right now the low of silver is basically $20. We've seen 20 hit how many times in the last decade, right? So the market's comfortable with calling $20 the low in silver. So how long would it take for the banking sector to get comfortable calling $50 the low? It's not going to happen overnight. So you're probably talking a substantial amount of time for the banks to start cutting checks. So, how long does that take? So right now, if you go back and look at annual silver production for the last decade, it's flatlined basically at about 825 million ounces. In COVID, it dropped to 780. In 2016, it got up to 880. Last year was at 830. This year, the Silver Institute says it's going to be down 6% based on 2022 numbers. So call it 825, 820, whatever the number is. So that's kind of the max. So the mining sector cannot produce more than 850 million ounces of silver annually, period. Right? So we know that. So what does it take to double that? So consumption in 2022 was somewhere around 1.2 billion ounces. The estimate this year is a 1.4 billion ounces. We don't know that number exactly yet, but call it whatever you want to call it. So that's a pretty darn big deficit. So I don't know how long those deficits can last before you see, much higher silver prices. The silver's coming from somewhere. I know Russia's got silver. Maybe they're selling silver to finance whatever they're doing. China doesn't export silver, so who knows? And they're one of the largest producers, so who knows where that silver goes? So it is a bit of a mystery, but nevertheless, I don't think you can see these kinds of prices last very much longer, in my opinion.
KeithNeumeyer highlights the scarcity of silver projects compared to gold, pointing out the significant disconnect in the silver-gold ratio. Silver tested new highs as gold-silver ratio pulled back below the 84 level. With the gold-silver ratio below 81 at the start of December, there's potential for strong silver momentum if the ratio moves back to early month levels. Emphasizing the shortage of silver supplies, Keith underscores the necessity of $100 silver to stimulate new production. A silver shortage could lead to a production slowdown, increased product costs, or even a manufacturer's ability to repair or replace parts if the shortage needed improvement. He further predicts a 300 to 400% revenue increase by May 2024, attributing it to industry reluctance in supplying metal to retail. Let's get back to the interview.
We have small investments in a handful of companies, some of which are in Nevada, and we watch them, and we have a team here that all they do, well, not all they do, they spend a lot of their time on looking at other companies. There's every week goes by, one of these juniors comes out with a news release. So we have a database. We watch it all. We're in discussions with many different groups on a regular basis, and but we have to at the same time be careful and strategic. We don't want to adding an exploration project to our portfolio is not going to do us a lot of good. It's just another place to spend money. So I think that from an M&A perspective, we need to go after things that are permitted and or already in production. And silver, you and I know it's like not an easy place to be. Like we could fill our portfolio up with gold assets tomorrow if we wanted to. I don't know why gold projects are so easy to come by, and we're trading 85 to 1, and we're mining 7 to 1. Every 1 ounce of gold that the world mines, the world mining industry mines, only 7 ounces of silver gets mined, right? And yet we're trading at 85 to 1. So that tells you there's a disconnect, between what people think, what investors think, what the banks think, what the world thinks about, how abundant silver is. It's not very abundant at all. And as a silver mining company, and we look at ourselves as a silver mining company, it's tough, like to find silver mines. They're just not around. There's no big silver supplies coming anywhere. So I don't know, we need, as I said earlier, we need $100 silver to spur on new supply. And it can't happen in a matter of a week. It's gotta, stay at reasonable prices for a lengthy period of time. It's an exciting part of our business. We're a mining company, obviously. And virtually all our metal goes through commercial industry, mostly electronics. But nevertheless, we started our own direct sales to investors back in 2008. And it's been interesting. It was small to begin with, and it's grown over time, and it punched through over 10 million in revenue a couple of years ago. And we kind of ran into a wall where we knew the demand was there, but the mints would not supply us the metal that we wanted. We kept putting orders in, we kept delivering silver to these mints, and they just kept sitting on our metal, and they refused to produce it into products that we wanted to give to our customers. So it became quite frustrating. And about a year ago, I made the decision to open up our new main. I said, okay, this is crazy. And so we made the investment, we got a facility, and I was just there, last week actually, and it's looking pretty good. We expect to print our first bars in the second week of January. So it should be good. And we're expecting we'll likely do probably north of 30 million in revenue, maybe, close to 40 million in revenue in 2024. We've not put out official guidance, so watch for that. Chris, you kind of maybe should have said those, giving you those numbers, but we're pretty comfortable with it. We think that our revenues are going to increase 300 to 400% as a result of that, because the demand is there. And the minting industry, for whatever reason, does not want to supply that metal to your average investor, because I personally believe that the industrials, the big consumers, the electronic manufacturers, the automotive industry are sucking all that metal out of the market, and they don't want that metal to go into the retail environment.
With the end of the year approaching, JP Morgan experts are putting out their forecasts for 2024, which highlight gold and silver as their top metals for the year. The bank is forecasting silver will break the $30 mark anytime soon. Considering the persistent supply-demand imbalance, how do you envision the evolving dynamics of the silver market? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.